morning to all traders and welcome to this Tuesday's Market Insights video provided to you by Orbex. Today we're going to talk about FX majors. We're going to talk about euro dollar, dollar yen and pound dollar. There is interesting developments around all of those. Euro is falling, is bearish because of course in Germany the PMI figures have fallen much more than anticipated. The same happened also in Japan, while at the same time the market PMI in the US is strengthening. So euro dollar is under pressure. Dollar yen is moving up because yen is weak as well as the dollar is strong, which makes us think whether the banks should start considering what they have done so far with policy changes and whether they are as dovish as they should be. Now, pound on the other side, we've had the Thomas Cook drama. We all heard about it. It makes me think, though, has really pound taken the news as badly as it should? I don't think so. I want to go ahead and start with euro dollar. Euro dollar is moving exactly as we expected. We had these ABC correction down here, right, with C wave ending with a triangle. We looked at this being wave 1, wave 2, 3, 4, and 5. Now, we're still moving along on those lines, within those lines. The thing is that we could see three things happening. Correction 1, 2, 3, 4, and 5 becomes more complex. We get a lower low, but not below the previous low where wave 1 started, and we move all the way up. The other one would be, 1 second, let me just get back to euro dollar. Yeah, there we go. The other one would be that we just finished here at 78.6 and we should be looking now to move higher. And the other one, of course, would be that prices stay within those lines, break the previous low, and head lower. This, of course, would be the most bearish scenario for euro dollar, but I doubt that would be the case. This signal here, over here, a combination of two divergences, the hidden and the standard, supporting a move to the upside, is normally a bullish sign. Although, that being said, we have to break above the 110.75 at least to get some bullish, further bullish signs for euro dollar. Now, on the dollar yen, it's moving exactly as we expected. We have A, B, and we're waiting for wave C to complete. Now, this wave C is looking to be an impulsive move, with wave 1 ended around here. Then we had an expanding flat. This expanding flat was validated by ending around the 108.26. We had a penetration for a false break, but it doesn't really matter much. The levels are pretty much accurate. After this intersection break of the this extended wave 2 triangle correction, we've got this 1, 2, 3, 4. We should be looking at prices to move back within this descending channel, right? And this is what we want to see pretty much. If that is a rejection level here, we should be looking prices to move higher. Most likely, this correction would be invalidated, and we should be looking at fresh structures with A, B, and probably C coming all the way up to reach the previous high around 111 or so, where we can start pretty much analyzing new formations. And the other pair I wanted to look at, of course, is the pound dollar. On the pound dollar, we're still looking good compared to the analysis we did last week. I still look at this as an ABC. Okay, I've changed the labeling a bit because we had a bit of an extension. So this is the wave A, wave B, and wave C. We have this ascending channel now that prices broke outside that level. So we're really looking now to move at least to the previous wave 4. Okay, then wave B. And then we should be looking also to see whether prices are going to stop around the 78.6 or so, or continue lower. If we break below that level, we should be looking really to move further down for the weak pound. Okay, in case that doesn't happen, of course, we should be looking at this potentially being wave 1, this being wave 2, and then we'll go for 3, 4, and 5. Okay, so we should be looking at this becoming a move to the upside, which means this is indeed 3, indeed 4, indeed 5, and that is not a correction. The other scenario, of course, would be that this is 1, 2, this is 3, this is 4, and this is 5. Don't forget, you can visit our blog. It's where we'll cover the latest news, provide trading ideas, and also all the necessary tools traders need.